Hey, it's April 4th. Welcome to the Market Update Desk with Scott Riley, powered by Mortgage One. So we had some job information came out this morning. We also had some commentary by one of the Fed presidents. This morning, watched an interview on CNBC with Fed President Raphael Bostic, and he was definitely hawking it up, throwing cold water on what the market, especially in mortgage world and real estate world, really are looking for. What he talked about was he isn't really looking for any more than one rate cut this year. And when he was pressed for when that rate cut could happen, he was talking about the end of the year. So we're talking about the November, December, and obviously it wouldn't be the November timeline with the election. So likely he'd like to see it in December. He did admit he was one of the couple Fed members on the dot plot that only was looking for between 0 and 1 rate cut. He specifically listed strong employment and strong GDP growth. The curious part of this is the strong job growth is coming from part-time jobs. There's no net full-time jobs out there that have been created year to date. And the GDP growth has been fueled by consumer spending using credit cards and buy now, pay later. So there's this disconnect versus what they're seeing in headline and what they're talking to people about and what's really happening underneath the hood of all that information. And it's frustrating from our point of view because we see it, we read it, but there's not the commentary and the policy decisions based on the underneath facts that the Fed is talking about. He also talked about something very surprising to me. Talked about it's going to be a long slog for getting inflation down to the target rate of GDP of 2%. He actually talked about, we're not going to get there in 24, obviously, and we're probably not going to get to the 2% target in 25. He was talking about it would likely be in 2026, getting to that Fed target range of 2%. That means these restrictive rates, maybe not where they are right now, but restrictive all the way through next year and into the following year. Seems very odd. The bond market is acting a little bit negative to that. I think they're throwing some of that off to the side, understanding that Bostic is definitely on the outlier of the hawkish side. But that's very interesting to see some of the Fed members are actually looking at those things versus what we're looking at with real numbers. The other item today was ADP job creation. Did come in a little higher than expected. So I want to break that down. I'll post a graphic of this in just a short bit. But total jobs created was 184,000. The market was looking for 150 to 155,000, so slightly more than expected. The income for annual pay increases for job stayers was 5.1%, and job changers were able to garner an additional 10%. Both of those were a little higher than expected and is creating some concern again on wage pressure. So the job growth primarily came from mid-sized companies. That's defined as 50 to 499 employees. That grew by 93,000. The specific industry, leisure and hospitality, led the way again, which is surprising because they've gotten up to where they were post-pandemic, and now it's even growing from there. That grew by about 63,000. Construction grew by 33,000. Transportation and trades grew by 29,000. It is good to see that the trades are growing because that's a much needed segment of the economy. So I want to get this information out to everybody. I think the market will stay a little bit steady through today and looking for that Friday BLS number for the direction that it's going to go on Friday and into the following week. We've made it now through halfway through spring break. We've had success with buyers. Give us a call. We're happy to go through information, get you pre-approved, help you understand where the market is, and use our knowledge and expertise to help you get offers accepted. Scott Riley, the Market Update Desk, your number one original local source for market information. Have a great afternoon.